My US dividend investing. Let's have a look. Hello everyone, Florian Heiser here, and welcome to another episode of Heiser Says. Grab your stein of coffee or your plastic cup of coffee, and we're going to talk about my US dividend investing. Now, many people have asked about it. My goal for this year is to just take pocket money, that the wife won't notice or miss, or little pieces of money that I find. So selling scrap metal, selling plastic bottles, cryptocurrency that I earn, and other types of income that just I can scrape together. And then I will invest that in US shares to generate a passive income stream of just dividends. And I want to get them just slowly flowing in monthly. And I'm doing this with with small amounts of money. Every time I get $450, that's the minimum deposit at IG where I'm doing it, I will transfer it over there and then buy these. Now, the reason why I'm doing this is because, well, I want to get a feel for the market in the US. I want to increase my exposure to that economy for all the issues they have. You know, there's still a lot of opportunities over there. And the majority of our savings right now, we're very heavy in cash because we're about to do a huge renovation on our house. We're turning our little 4-bedroom place into a 9-bedroom place, everyone, because we've got such a large family and we need to future-proof it for when we have teenagers. So I thought, I would do this at the beginning of the year. Rachel, my wife, everything's combined with us with regards to finances. We've had the same accounts for a while, so we make these decisions together. She's not too worried about me having something to play with, so I get a bit of exposure to the market. Now, what am I sitting at now? I've been doing it since January this year. And there you go, guys. I'm at $8.41 in February in dividend income. It's not much, but, it's just a little tiny bit. We're not talking big money here. We're talking small amounts that I'm just investing, if anything, to encourage other people to look at building up a passive income stream. And I know, there are some people would argue against dividend income because your share value goes down. But if you've got a long-term horizon, it doesn't really matter. My goal is to get it to $100 a month. $100 a month. It may not seem like a lot of money, but think about it. That's all your internet paid for a month. That's dance lessons for your kid paid for. Things like that. And if you don't need to work for it, sure, you need to work for it, but it's kind of a bit of fun looking at these different companies and different options and just finding some dividends and getting a bit of a feel for it. And if it tanks, which it probably will, because everything is just going crazy right now. I'm not going to tell you what I'm investing in. I'll show you what I used to find them. But anyone who's telling you now, making predictions about these things, I mean, either they're really good at it, they're experts. I'm not. I'm a complete amateur, complete noob. But everything's going up, everyone. The Reserve Bank over there is just money printer go brewer, and it's a candle effect. So in one way, I'm trying to fight inflation in the States. So there you go. I'm 8.4% of it. I've already gotten, 78 cents in March. And I mean, it changes your perspective in some regards when you think, okay, I've invested this money. I've only made 78 cents. Maybe I won't get that coffee. Maybe I'll take that $5 and I'll put that in here. That's the same strategy I used to attack our debts. It's just one small bit over time. And I like the $100 a month goal because, I mean, that's $1,000 a year, guys. That's a decent amount of food. It's a decent amount of food, and anyone can do this just with small amounts. The reason why I'm using US stocks is, now I'm doing it with, I'll show you who I'm doing it with. I'm doing it with IG, just because it's free. Now, this is the thing, the stocks aren't actually in my name, they're in IG's name. So I have the third-party risk of them going under. There's a risk associated with that. Whereas when I'm buying Australian shares, I'm using selfwealth.com, and you'll see I have referral links to that, so whenever anyone signs up, I also get like 5 free trades. But then these are registered under my and Rachel's name, the Self-Wealth ones here, where the IG ones, they're holding it on your behalf, so there's an element of risk there. You've got to understand the differences. But I don't pay any trading fees. And for the amounts that I'm talking about, $10 trading fees adds up. But here in, Self-Wealth, that's for bigger amounts that you want to invest to try and absorb that trading fee. You want a couple of grand each time at least. We're here, my IG, my US shares, guys, this is my pocket money. This is just play money that I'm not worrying about. See if I can turn it, stuff that I would spend on computer games or, junk food or eating out. Stuff you don't notice. Now for me, if I can put together $900 a month and just chuck it in there, that's easy for us not to notice. For some people, that may not be. For others, you may be laughing, going, "Oh, it's nothing." I've got millions. Well, that's fantastic. But you got to understand, there's some people that are at the beginning of this journey to build up some passive income. Maybe they've never even thought about it. We saw yesterday how many people just started entering the market for the first time. You want to look at these things with regards to your risk. Some people will go all in hoping something and it'll go to the moon and they'll do really well. Others will do that and will lose a lot. So you want to kind of spread out your risk. A lot of people look at ETFs. A lot of people go to managed funds as a way to kind of do that. With regards to pocket money investing, I've got a goal, build up passive income, and it's something that it would not be a detriment to my ability to support my family, pay my bills, or do the renovation and keep the wife happy if we lost it all. That's the strategy I'm taking. So what am I doing to find these companies? I found this website here, and this is Dividend Max. Now, I don't really pay for any of the services here. You go on the dividends here, and what they have is they've got a whole series of different regions, and you can go North America, and you can select by the exchange, and you can find all the different companies that are listed here. How much their previous dividend is, what their next dividend is, if it's going up or down, and when the next ex-dividend date is. Now, say you want to buy this one, Abbott Laboratories, ABT, for $115. Now, you want to get your hands on that dividend. Now, you want to make sure that you own it, or that the third party has it assigned to you prior to the ex-dividend date. Because once the ex-dividend date kicks in, that means they've taken a record of everyone who owns the share, and then you'll get your share distribution based on that. If you don't get in before then, you'll have to wait until the next period. Now, I'm looking at, my goal is monthly income, monthly passive income from these. So I found there's a lot of them that have, that pay quarterly, that pay monthly, depending on, where they're from, or what strategy they use. You'll find a lot of the real estate investment trusts pay monthly. A lot of investment companies will pay monthly, or you can mix it up. You can get a few quarterly, a few monthly, and some of these other ones. So the US has a few options like that. So I find this is quite useful just to have a whole, to get a feel of what's coming. It's not 100% accurate. It can change. It can be adjusted. I mean, there are tax implications as well to buying these. Some of investing in Australians, you can get franked credits, so there are more advantages to this. I'm focusing on the US market because, well, I want to get exposure to that. Right now I don't have that much exposure to the US economy, and I want to, even though their money printer go crazy. There's still companies that will make genuine products and services and will generate income that people will still want to buy. So that is the strategy that I have been doing since the beginning of this year. And, it's a bit of fun, guys. It's a bit of fun. And, yeah, that's just it. So people were asking how I'm doing it, where I'm finding them. You can get all these other ones. You can get big name brands. I'm not really in the techs. I'm investing in boring things, really boring stuff, guys. And we'll see how it goes. So that's my strategy here, everyone, if you're interested. Do your own research. Make sure that you are at a risk level that you are comfortable with. I would not go all in. I just don't. It's my one thing I was doing when I was playing with the cash for difference, which aren't even legal in the States. These cash for differences that you can do to try and make money in the movements in the market. And I'd just watch it and I'd get too emotional and I'd just lose money. And most people lose money on that. For this, I'm not even worried about the value of the shares. I want to just make sure I get companies that have a proven track record and that are paying a steady dividend and just build up a little stack. Because the goal is then when I get 100 a month, well, then you buy more, and then you buy more, and then you buy more. You want it to turn into a money-making machine where it's just a little bit of passive income. And if you can do that just by scraping together little bits of money you can find around, sell stuff you don't need, old toys you don't have, or old tools you don't use, then turn it into something that can make you money. And then when you're out and about going shopping. You're thinking, you know what, I could buy this junk food, or I could buy this toy, but that's like 3 shares in this company. And next month that will give me, so many cents, those shares. And then over a year, it'll pay this much. Why would I want to buy this where the instant gratification will be gone in a moment, when I could just get something passively giving me money for, some time forward? And that will help spread the risk. You want to diversify your risk. You want to own shares in a variety of different companies and sectors, so your risk is diversified. But one thing you definitely have to be aware of, guys, the market is just insane right now. It's going at the top. I mean, if we have a look here, the Dow Jones, the S&P 500, the NASDAQ, they're all really high at the moment. So the stuff I'm investing in isn't really that sexy. When the market's corrected, it's tended to just more money's gone into it, as opposed to these things. I'm looking at boring stuff like dividends and price to earning ratios that make sense. I'm probably doing it wrong. I meant to go all into GameStop and Tesla, but I just can't do it. I just can't do it. I've got some Apple shares, but So guys, that's it. That's my little passive income, pocket money experiment this year. So far, how we're going. That's probably the first couple of months, and we'll see. I should every month, so long as I get that passive income a little bit higher, then I'll be happy. Then I'll be happy. That's the goal. We'll see how it goes. So, what are you doing, everyone? Are you investing? Are you already, have you started out doing passive income investing? How are you doing it? Or are you one of those traders? Let us know in the comments below. For someone starting out, what advice would you give them? Would there be any books you recommend or strategies that you would suggest? Let us know in the comments. Thanks, guys. Take care. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there's a few ways you can support us. You can join us on YouTube. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from Heiser Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.